Hello everyone and welcome to this online presentation. Everyone has definitely heard about Lotus Bakeries and their delicious products, but how did they suddenly become so popular in the stock market? Based on their financial growth during the years, I will give you some important reasons on why investing in this strong and ever-growing company is a great idea. The main question we're going to focus on is, should we invest in Lotus Bakeries, yes or no? First, I will talk about their liquidity, then about their profitability and their solvency, followed by the stock price and their evolution during the years, and finally I will give a conclusion on why investing in this enterprise is a good idea. Let's start with the liquidity. First, we have the net working capital. This gives us an overview whether the company can pay its current liabilities with its current assets. If your business's net working capital is positive, that's a good sign you can meet your financial obligations in the future. As you can see, the net working capital keeps growing each year, but there was a slight drop in 2022. It's clear that Lotus Bakeries can easily pay their current liabilities with their current assets and that there are no financial problems going on. Next, you see the current and the asset ratio. They both show us the financial health of a company and how good or bad their liquidity is. If a company's current ratio is higher than 1, it means that they have a good liquidity and can easily pay off their debts. As you can see, they start with a ratio of 1.12, which isn't exactly bad, but it can be a lot better. In 2020 and 2021 there was a big improvement, followed by a small relapse. 2023 is their top year because Lotus has finally a ratio higher than 1.5. The asset ratio is also good, but this ratio is more strictly and correctly because they exclude inventories and accruals. This is because inventories and accruals might not be easy to convert into cash. They are still above 1, so they have enough liquid assets to pay their current liabilities. The following ratios are about their profitability. First, we have the return on assets. This shows how profitable a company is compared to their total assets. How efficient is the company at using their assets to generate earnings? A good return on assets is in the 10% range. Anything above that is excellent and below 5% is considered harmful. You can see that during these 5 years, Lotus has a return on assets higher than 10%, so this means that they are very good at using their assets to generate profit. In 2020, the return on asset was a bit higher than the other years. Then we have the net profit margin. This calculates how much profit a business can make as a percentage of its revenue after all expenses are paid. As you can see in the graph, 2020 had the best net profit margin of 8.25, but it was not that high because usually a 10% net profit margin is considered good. In general, it's clear that there's a downward trend starting in 2020. This is because each year their turnover keeps increasing, but their operational costs rise along with them. Lastly, we have the debt ratio. This shows the percentage of a company's assets financed by debt. A debt ratio below 0.5 is generally favorable as it indicates that the company has more assets than liabilities. In 2019, Lotus has a debt ratio of 1.64, which means that 64% of the company's assets are financed using debt and the other part by equity. As you can see in the following years, there's a downward trend, so that's a good thing. Now let's look at the stock price and its evolution. As you can see in the graph, the last month the stock price varied a bit between 12,000 and 12,600 euros per share. Today, the price for one share has dropped to around 12,400 euros. In comparison to the last 10 years, as you can see on the next graph, we can say that the stock price has had an extreme striking from 2023 to 2024. During the other years, there was still a growth each year, but not that notable. So, is it a good idea to invest in Lotus Bakeries or not? Based on the financial ratios, I can conclude that it's a good idea to invest in Lotus. Why? Their liquidity is well and it appears that it will keep growing each year, so this is a good sign. The profitability of Lotus is not bad but not extremely good either. They make a lot of profit, but their operating costs rise along with them, which is not a good sign. Their debt ratio keeps declining each year, so their solvency is also a good thing. And their stock is stable and performing well, although it is very expensive. It may not be the best choice for the average investor because of its high price, but for those looking for a unique and high quality investment, Lotus Bakery stands out. So, as a conclusion, I think it's a good idea to invest in Lotus Bakeries.